Right, here we go. All right. Good morning, everyone. We are so excited to have you all here joining us today. We're going to give it a second to let everyone get in and settled. I have a couple reminders for folks. So, the first is we want this to be a super interactive session. So, as we're talking, if you hear something that you have a question on or that you would like us to go deeper on, you'd like us to clarify, in the bottom of your Zoom screen, you're going to see a Q&A box. If you don't see that, click on the circle that says more, then you'll find the Q&A box. There is where we will actually see all of your questions. If somebody asks a question that is similar to yours or you also would like to know the answer, go ahead and upvote it. That will tell us that multiple people are interested in hearing that answer. And so we'll try to prioritize those questions first, and we will be paying attention to that Q&A box throughout the session. So I'll try to pepper in any questions and answers as we go, but definitely saving some time at the end for us. Another really important detail. So, folks in the chat, I see folks have probably already started doing this, but I always love if you will drop where you're actually calling in from. It's always really great to see how international our audience is and get everyone interacting, even though we are here on a webinar. I see India, Montreal. Slow group, come on. Y'all are gonna Sweden, Ireland, I love it. Another India, Nigeria, Montreal. There's usually one place that I haven't seen on here before. So I'll keep an eye on it. But in that chat, it's going to move really quickly. You are welcome to share your LinkedIn. You're welcome to introduce yourself, but please do not talk about your fund if you are fundraising. We want you to be mindful of general solicitation. Don't want anybody to get in trouble. And please, if you have a service that you're selling, if you are trying to get customers or clients or investors out of this, you are in the wrong place. Unfortunately, those messages will get deleted. Please don't put them in the chat. If we see it kind of over and over and it's getting spammy, our team will have to kick you out, which we never want to do. So please be respectful of that chat. Don't put your thesis in there for us. Again, we will delete those messages as they come through. Now, with that, I think we are officially ready to get started here. So thank you all for bearing with me. I am Kelly Schricker. I am the head of Decile Labs, where I lead our venture education programs, including Venture Institute, VC Lab, Emerging Institute, and LP Institute. At Decile Group, we believe in venture for good. VC Lab was actually launched with a single conviction that venture capital done right is one of the most powerful tools that we as humanity have ever built for solving the biggest problems. And we're going to talk about some of those big problems and the solutions that are coming out today, which I can't wait for. And we believe that deploying capital into companies that are bringing widespread positive change will change the world and how we all live and interact. And hopefully that is all for the better. Through our programs, we've actually helped launch over 900 venture funds across more than 80 countries, which is nuts. So all of the folks that are sharing where you're calling in from, we probably know folks in your area. We've probably helped to launch a fund there. And if not, we would love to figure out how to do that with you and expand our reach. So the other thing I always like to mention on the front end of this call, in case anybody's a little bit newer to us, we really support people through the whole life cycle of VC. So whether you're breaking into venture and learning about the industry through our Venture Institute program, if you're launching your first fund, we have that VC Lab program I mentioned. It's a great program. We're taking applications right now for our Cohort 22. So please feel free to apply, put yourself out there, make that dream come true. And we also help folks that are learning about venture as an asset class and hoping to invest through our LP Institute and a lot of other programs that we run. And so no matter where you're at in this journey or kind of where you're coming in, we are here to help and support you. And again, we believe in venture for good. So today we are actually going to be talking about kind of what helps to move capital through this industry, right? And what are some of the stories about how this actually happens and the challenges that are being solved and the people that are helping those folks solve the biggest problems and in different ways, right? Sometimes through funding, sometimes through the support, sometimes through funding the investors who then fund them, right? So I'm really excited to have three incredible guests with us today. I'll let them do introductions. I'd love to start with you, Paul. Could you come off mute, say hello, and tell us a little bit about yourself and your organization?
Sure. Thanks, Kelly, and thanks for that introduction. My name is Paul Rowland. I am the Chief Operating Officer, and I also look after international and government relations for Environment Next, which is a nonprofit investor. We're a foundation that does both grants and investments. And so we started off a few years ago doing exclusively grants to to other nonprofits or individuals who are doing good stuff in the climate space. And a couple of years ago, we decided to move into the VC space, investing in funds because we wanted to sort of magnify some of our impact. And so Environment Next is a relatively small player. We are the follow-on to a larger and longer-lasting organization called carbonfund.org. And we decided to move on from the carbon space and get into the investing in different ways. And so this is for my own background, I started full time with Environment Next 3 years ago, but prior to that, I was in international development. And so I'm very familiar with investing in civic organizations and in private sector initiatives to help solve a variety of problems. But climate, for me personally, has been, and in the environment, has been a personal endeavor for decades now, and it's good to be in this space professionally. Just a couple of seconds about Environment Next, because I think it'll help frame our conversation. So we invest as a nonprofit, and we invest for impact first. And so that doesn't mean that we don't care about profit. We do, but we are willing to take risks in order to emphasize impact. And so that's a first principle for us. Um, as I said, it doesn't mean we don't care about profits. Profits are essential because our thesis is that confronting the multiple environmental crises that we're facing as humanity means engaging private sector. That means the voluntary sector. That means philanthropy. It also means engaging capital. And this is why we're on this call. And that means these companies have to be successful if they're going to have impact. And that means they have to be profitable. And so that's one of the things that we look for, obviously, but it's not our first principle. So that's a very quick sort of summary of what we do.
Amazing. Thank you so much for that, Paul. Karen, I would love to go over to you next. If you could give us a quick introduction of yourself and what you're working on.
Yeah, absolutely, Kelly. Thank you so much for having me and having us. Really excited about this discussion as we unveil a lot of nuggets here, hopefully are helpful to everyone in the audience. So my name is Karen. I am the founder and managing partner at Pachamama Ventures. Pachamama Ventures is a firm I started with the help of VC Lab, actually, which is a full circle moment here. So I went through the program back in the day in Cohort 8. Sounds like back in the day because they have so many programs since then. It's amazing. They really are a machine. And so, yeah, Pachamama Ventures, we invest in early stage climate tech and also companies that broadly define in their thesis are tackling problems and building for the second industrial revolution. We call the second industrial revolution the climate reindustrialization. So we have to rethink everything from materials, processes, industry, everything that we have gotten to know and really be excited about that the first industrial revolution brought us is actually also brought a carbon problem, right? So there are technologies that are working to change everything, the chemistry of materials, processes, the way we move, the way we eat, the way we source products and everything that can work with Mother Earth. So that's my thesis and my why, or the thesis of Fund One, I should say, which is closed, which is why I was able to say. And yeah, so really excited to be here and have this conversation. And the way it all came about is Environment Next is our LP partner, and we were able to invest in Aaron's company, Mars Materials, which I think is going to go next. Thank you for having me.
Of course. And it is such a full circle moment, Karen. And another full circle moment is that Aaron, our next guest that I can't wait to introduce, and I go way back. We're college buddies. We actually entered the tech world together with our first startup as co-founders. And all of these years later, somehow we found ourselves here. So, y'all, you can do this to our audience. There are so many ways to break into this industry. There's going to be a lot of people to help and support you on that journey. You never know who's going to come back and always be on that journey with you in different ways. With that, Aaron, I would love for you to say hello and introduce yourself and Mars Materials.
Yeah, hi everyone, and happy Wednesday. Aaron Fitzgerald here, CEO and co-founder of Mars Materials. We are a Houston, Texas-based startup, but I'm actually calling from New York today. And we have a way of transforming carbon, waste carbon, into everyday products. We've effectively created a new validated pathway to make carbon fiber and other materials like water treatment chemicals. Our backers include folks like Bill Gates' Breakthrough Energy Fellows, Shell, U.S. Navy. Our investors include Pachamama Ventures, proud to work with Karen, Black and Veatch, and other funds like Better Way. Me personally, I am a expert in carbon removal. Consider myself a carbon removal entrepreneur. But as Kelly alluded to, I'm also a three-time founder. I focus specifically on doing what we can to make our products more sustainable and effectively turning them into carbon sinks. So think everything from racing cars to diapers to power lines. All those today are carbon emitting products, and we have a solution to make them carbon negative. Just really quickly about me a bit more, going back to childhood, I've always been very entrepreneurial. I think in college, Kelly can attest to that. And I'm also an animal and nature lover. So I focus my attention on market-based solutions to climate change. And after taking a life-changing trip to Lake Tahoe, where I was able to really recognize where I was at in my career and my life, I took a major pivot and moved into climate. I oversaw commercialization for a company that could detect large methane gas leaks to super emitting ones over oil and gas fields. And there I got to really see the scope of the problem. It was underreported and not being solved. So that's when I started to think, what are some ways that I can do to scale my impact? And that's where the thesis for Mars came in, Mars Materials. So we sit at the nexus of carbon dioxide removal and industrial decarbonization, and we're really leading the way on carbon utilization and getting those products into the market. So really excited to be here today.
Amazing. I am just so excited for the group we have here today. What a powerhouse of individuals. I would love to go over, Karen, starting with you because you're kind of the center of this for us, and you've just had this really important moment where you've closed your first fund. I'd love to hear from you. We're talking about how capital flows. What was the fundraising process like for you, and how do you feel the fundraising environment is right now from the GP perspective?
Yeah, absolutely. I'm happy to. Well, we're gonna talk about a lot more, and it's gonna probably be distilled throughout the hour. But I would say I would not have been able to start this fundraise and thinking about the fund and doing the tactical stuff and going through the motions without VC Lab, right? So I'm not being paid to say this to people. I'm not really not. I'm a genuine fan of VC Lab because as a newcomer to the industry and wearing many outsider hats, many, right? Like, so I don't come from a proper background in industry. I didn't come from, I'm not a spin-off from a larger VC firm, which is like a very common now way to go into it, or an exited founder that found myself with like a ton of personal wealth. And I'm like, well, maybe I should go on the other side of the table. That's not me, right? So there's a lot of common popular backstories to going to VC, and none of that was me. In fact, after 7 months of failed attempts to get into VC firms, so like, becoming a junior or associate or whatnot, and getting nothing, like literally nothing. Sometimes not even a recognition email. Thanks for your application. Nothing. I kind of lost patience, right? And I said, well, what would it look like to hire myself into these roles, right? and then they fortunately I came across VC Lab. So at the time, I literally had nothing but the thesis chosen, or the sector I wanted to invest in. That's all I knew. I wanted to go all in on climate. I had learned about, we all can remember Al Gore 20 years ago, or a little bit over 20 years ago, and now standing the bells the first time and the alerts. And at the time, most people thought him crazy, right? but I was studying finance and economics. I was in Peru even studying economics when I took my first natural economics class, natural capital, and how do you price that out. And the class actually didn't even survive, or what it wasn't going to survive. It wasn't going to happen. And I remember the professor asking me for like, you seem really interested in making this happen. If you can get some signatures of your other classmates interested in the class, then we'll have it. I'm like, okay, how many do you need? 12 at least. Okay, I'll get them. And I was walking around and getting the signatures. But all of that to just is that's a backdrop, right? Because it really I don't look, sound, the part, and none of it matters. And if anything, it probably gave me an edge, right? Which I want to talk really briefly now about. Fundraising is hard. It's hard, especially now, right? When there's a lot of noise and pretty much if you're AI, like that's a very different game. Everything X AI, it's hard, right? So you have to cut through the noise with a very clear message, concise and memorable, right? And so if you can manage to do those three things in a thesis or your startup pitch or whatnot, then you can get through. Um, but I would say it wasn't easy, right? Like, so maybe I'll leave it there for now, and then we'll talk more throughout the hour.
And I have a follow-up question for you, but fundraising is definitely not easy, but it is something that can be done, right? And once you're kind of through it, there's all these kind of moments that you hear, and it's like, oh, the VC Lab team was telling me this, or that actually came true. And I'm sure we're going to uncover a lot of those things today. But Karen, I'd love for you to share a little bit about your journey and how you met Paul and what that process looked like to help just demystify
Yeah.
how managers actually meet institutional investors and what those relationships look like and how they build over time.
Yeah, and I don't know if Paul, you can chime in if you remember this too, but like, actually, Paul was an intro of an intro for me, anyways, for my case, and then from a LinkedIn post comment. So it took three people to get to Paul, because it's not like, I mean, actually, Environment Next is very prominent on LinkedIn. They do post a lot. They do a great job with the content that they provide, and they have webinars. But I did not know they existed even, right? So it is truly difficult to get us together. So it was actually Genevieve Lemarchal, which was another alumnus from a VC lab, that made a comment on LinkedIn about having to connect with someone else in Canada on the climate impact. And I can't remember exactly what the LinkedIn post was about. So I liked that. And I said, oh, I would love to connect with your friend, and then mention the friend. And then this other person and I exchanged a couple of emails. And this other person over email told me I needed to connect with a Claire, which is the person who actually got us in touch with Paul. So it took three people, right? I'm just saying, like and it took like I guess it was a lack of the draw that I saw that comment when I was mentioned by Genevieve on LinkedIn, and then I connected with a friend, and her friend connected me with Claire, and Claire connected me with Paul. So it was not, it just to emphasize the importance of really being present, like always watching out for the opportunities, and then really meeting the right people. So then I got a video call with Paul, and then we developed this relationship, right? Which happened actually over a shorter amount of time than I would have thought. So kudos to them for really building a conviction fast, but also like being very thorough, because it was a process. Right? It's a process, right? So, but yeah, that's how we got in touch, and and the rest is history. They became such a great supporter of Pachamama,
I
our
love
efforts.
that. And Paul, I understand that this process moved pretty quickly, actually, once you all were in touch. Can you walk us through a little bit about kind of what that journey looks like? Often just to give folks a little more context, when we're helping folks raise their fund, when you're raising your initial commitments, it's often from people who already know and trust you because you don't have, a track record to lean on. And institutional LPs tend to be a very different pitch because you're going into their process. And Paul, I'd love to hear, kind of how structured are you all? Kind of what does that process look like? And just maybe through the lens of how you were able to meet Karen and then move through that process of investing in her and getting to know her over time.
Yeah, well, as Karen said, it's a degrees of separation thing. So we were probably about 4 degrees separated at the beginning, and Claire, who she mentioned, from Rizoma Ventures was on the board of one of our grantees, one of our nonprofit grantees. And so we had had a couple of chats when we decided to go uh, into putting, our money into VC funds. And she sort of emailed me out of the blue and said, "Hey, I just, met Karen, and so, maybe you should chat." So we did. And Karen was in our first sort of cohort of.
Yeah, I think we
Oh,
paused or
did we
froze for a
lose
second.
Paul for a second? I'm going to stop Paul's video, see if that helps us. All right.
Yeah, maybe.
That is okay. We keep it pushing. These
We're
things happen on
Oh,
Zoom. Paul, I think I hear you back. Hello, can you hear us?
Oh, I didn't know I disappeared until my picture disappeared.
That is all right.
Uh,
You are back and we can restart your video. We
yeah,
were
there
about
we
kind of
go.
halfway through that. You were just saying that you had the mutual email
Yes.
connection.
Okay. So yeah, so that was a 6 degrees of separation kind of thing. And because it was somebody who was a board member of an organization we'd invested in uh, as a nonprofit, we'd given a grant to that organization. And so, um, as you said, there's a degree of trust that goes into that in terms of the people that you're working with. But it's also about our risk profile. I mean, we're looking for women founders. We're looking for you know, um, new VC funds, and we've got a mix, but we're also looking for very early stage. So it was something that fit. But also, when you look at Karen's background, in um, she's got diligence, she's got compliance, she's got relationships with Fortune 500 companies. She worked for Fortune 500 companies, and so they're all sort of household names, and so that lends a bit of confidence to us because we're a small organization. We don't have a whole sort of back end of compliance people. You're looking at compliance right here. And our principals do a lot of that work. And so what we want to know is that people have a track record in either the obviously as fund managers, or they have a track record in doing work that would help them manage a fund, or in subject area, in terms of the funds they're investing in, so, or the companies they're investing in. So that's sort of how we looked at it. I met with Karen. I introduced her to our the rest of our team, and we were in deep enough into our cycle then that it actually meant that we could commit fairly quickly. And Pachamama was one of our earliest investments.
That's amazing. And Karen, again, congratulations on that. So, Paul, is that a typical timeline for you now? Or, do you all tend to take a really long view of relationships? Often we'll have LPs on who would like to meet folks on their first fund, but might not have a strategy to invest until their second or third.
So we don't only look at their first funds. We don't only look at seconds, or we have a kind of mixed approach to that, and some of that is personal in terms of what the principals look for. Um, but in this case, our cycle has developed because as you get deeper in, you get more contacts and you get more people, and there's more references. You do more calls, you talk to more people, and you get to know the space a little bit better. And so it now ironically takes us a little bit longer because we have more options that we're filtering. It's not, although usually we can make decisions quickly if we need to, but it's still an evolving space for us and exciting.
Amazing. There's this idea that one of our managers from the graduating cohort of VC lab that I told them I'm going to steal this and use it all of the time because I think it is so true. Capital moves at the speed of trust. And some of the themes that we're already hearing today is one, that trust, warm introductions, kind of leading into I'm going into this with kind of a good assumption that this person was introduced to me through people that I already know and trust. You already mentioned some references. I'm sure we'll come back to that. And with that, I'd love to bring kind of Aaron back into the conversation. And Karen, your relationship with Aaron and how you actually met each other. I'm not sure which one of you wants to tell that story, but would love to hear kind of from the GP to founder side. How did you all meet and what did that look like?
I let Aaron take that one. Why don't you, Aaron?
Yeah, so Karen and I met, I believe, in October or September of 2024. Is that right? Through an existing investor of ours who had participated in our pre-seed in 2022. When she and I had met, it was a very easy conversation. You talk about those trust levers, and I think we were able to find areas of alignment really early on in terms of thesis fit, in terms of how we go about living our lives and our own personal values. And that really opened the door for conversation. And over a espresso that I think was supposed to last for 30 minutes ended up lasting for an hour. That very next day, we always invite folks to our facility because we really believe there's one thing for me to say what we do and to kind of talk about our materials, but if you don't really see the production process in place, it can be a little hard to I think fully ground it. And Karen was able to then stop by and meet the team, see the facility, and see the work that really goes into not just the words that I get to say on screen all day. And that was, I think, enough to give her conviction to move forward in her diligence process. And then from there, that diligence process was also another way for her in Pachamama to build, as I understand, and feel free to jump in here, Karen, rapport on a corporate level. But then, at the same time, we were having conversations. She was asking, what's your vision? What's your plan? How are you going about team building? What are you thinking about when it comes to, bringing in folks who don't look like you, and all those other aspects that are also important when you're talking about scaling up a generational company. And I'll let maybe Karen, if you want to maybe talk about then what got you to the conviction piece.
Yeah, absolutely, Aaron. So yeah, I was excited to meet Aaron because I didn't confide this in Aaron until after, just long after I invested. But I was aware of Mars Materials before I was introduced to Aaron over email, and I couldn't believe my eyes. I'm like, I think Jonathan, the friend that introduced us, was like, "Do you know Mars Materials?" Like, "Do I know Mars?" Okay, wow. I was like, "Yeah." So what's going on? I was like, and he had invested, right? And so he was flagging it as a next round investment now opportunity. I was like, "Yeah, I don't think I can participate. They're doing something really generational, truly generational." I knew what they were working on. And then he offered an introduction, and then I talked to Aaron, and everything just kind of advanced. But we did. I would say that my excitement is typically tempered by my need to really go deep in diligence, particularly in things I'm not strong, right? Like the technical stuff. So, I mean, I think Aaron can attest that we did a little bit of a back and forth because I really wanted to cross my T's and dot my I's. That's super important when you're doing this kind of work, especially as a solo and you don't really have anyone else that is kind of like you don't have a voting committee or anything you do so as a solo GP. What's nice is that you can move fast on opportunities, but you do want, right, like to be very thorough. And unfortunately, because I work with VC Lab, and they are actually my fund admin as well. They do have a team that sits in as an IC. So it's an investment committee, right? So we do have two people that are part of the DESO team that help us, right? With like, hey, here are things that you might not have flagged, and the diligence, and then we review together, right? But I would say in terms of the thesis alignment, in terms of the big impact, if this goes well, this can go big. That's like the biggest thing that we think in VC world, right? Like how we think of bets. The impact is clearly there. I really like Aaron. I think I really like that we were able. I mean, it was lucky that I was in Houston when I actually met up with him in person, and then I was able to like move towards the tour. I think that was a really important part for me. Be able to interact with what's physically being built, how everything is being made, what the works are like, right? Like everything that work and the works and just seeing and meeting the rest of the team. And it was cool to kind of like wear almost a hazmat suit to have to, because Shell, they work out of Shell, right? So it's a pretty thorough safety procedure process and protocol to really get in there. And so that it was cool. It was a cool experience. I like it. But I'm a nerd about these things, right? Like I really, if I'm investing in hardware and deep tech, I really like to see it all. Deep tech demo is my happy place. So and it build conviction, right? Like, and then I follow with my whole process and everything. Um, yeah.
Amazing. Well, and again, we're kind of talking about a lot of the things that we say in a lot of our programs, but also, the themes that are already starting to emerge. And, as we've talked a little bit about, the diligence process and a very high level. Karen, you did your diligence, and I'm assuming that included reference checks. Paul, you've already mentioned doing reference checks on Karen. I'm curious, so Paul and Karen, when you all are doing reference checks, what type of questions are you looking to get answered? What is your goal when you go into those reference checks?
Aaron, you want to go first?
No, you go. You were muted.
So, again, we're looking, uh, not to confuse things. We don't do a lot of reference calls in terms of phoning other people to say, is this person or this fund worthy? What we do is, we were referred to Karen by somebody who, is a trusted partner, and um, we will have calls, with people who have knowledge, and so we it's a matter of often being referred by, and so we have now invested in a couple of funds that were referred to us by other funds. And I'm next month going to have conversations with somebody that Karen referred me to. So that's sort of where our trust comes in. We do obviously, our diligence process is in looking at, typically the people behind it, what track record they have inside and outside of VC, as I said. Karen has a very impressive CV to begin with. And uh, but as she said, that doesn't necessarily always translate immediately. And, I think there are two things that we learn, if you have a career that's long enough, is your previous career means both everything and nothing at the same time. And so it does matter. And you will find things that translate, and you will find, and certain cues will make me trust somebody who's been involved in positions that require diligence. Um, but that doesn't mean that going into a new space is easy, and I've had to do that multiple times over my career. And the first couple of years are always full of surprises and unexpected difficulties and unexpected consequences. And so I think those are both. Uh, I haven't been in the this investment space for very long, but I've had a very long career, and in dealing with people and reading people and and looking for the cues that we and it does come back down to, as you said, Kelly, trust.
I'm so glad that you so politely corrected me on that. And I'll say, part of why I call that out right now, and I think this is helpful for all of our listeners, when we are helping and coaching and supporting folks going through this journey, institutional LPs can be some of the hardest because, again, they have their own process and everybody's going to do it differently. So even though we know everybody's going to do it differently, right? Like we know that trust is such an important thing. I made an assumption that you were doing reference checks because I heard the word reference and kind of just assumed, right? And the reality is you're still achieving that same goal of getting to know the person and building that trust with them, but you're doing it in a slightly different way. And so I love that you kind of clarified that. And, I think one of the important parts about all of this is, we're all trying to build these relationships and build that trust. And it doesn't just come down to, okay, well, I have to nail references or I have to do this one thing. My data room has to be perfect, right? We haven't even talked about a data room on this call, but it's such an important piece. And again, it really just comes back to, at the end of the day, what we hear overwhelmingly from institutional LPs and, high net worth individuals is that this is a relationship business and it all goes back to the people and their mission and finding your people in that journey. So having said that, Karen, I'd love to hear a little bit about, how you do your references and, kind of what else you're looking for when you're deciding where to invest and to move money.
Kelly, if I could
Yeah, go for it.
just complete that thought. I'd also like to say I have amazing colleagues, and so this is also what builds things. We don't, we have a CEO, we have other um, colleagues, but we don't invest in a VC or a company until we've all agreed on that. And so we will all take a different angle going at what we think is important in that. And if we see things we don't like, we'll have a chat about it. And so that's part of our sort of our diligence. And so because we also trust each other and our instincts, and we'll take different looks through the data room and find different things. So that's I think an important part as well. And I one of the reasons I my hat's off to Karen is because she doesn't have that in the same way as we do in terms of full-time colleagues who she can tap on the shoulder and say, hey, have a look at this by noon and get back to me.
Yeah, I
Sorry to
love.
interrupt.
No, all good. I love this. Again, I want this to be as much of a conversation as possible. And, Karen, anything to add there? Again, I would love to hear your thoughts on when you're starting to build that trust in that relationship and how you kind of use references or other people's perspectives to help you when looking at startups.
Yeah, absolutely. I would say there is no cookie cutter when it comes to the process because the reality is that some deals will come to me referred, like in the case of Aaron and Mars Materials, where it was a warm intro, right? And so that's nice when it happens, but it doesn't always have to be that. We have an intake form, for example, on our website where companies that fit our thesis can submit their company for consideration, and we always get back to people whether it's a yes or a no, or not a yes, but like continue the conversation that are more or like a no because it doesn't clearly fit. And many times, many companies won't fit, and it doesn't. It it's the majority of the no's have nothing to do with the company, honestly. Sometimes it's a portfolio construction decision. Most of the time is actually, let's be honest. Portfolio construction is really important in this portal. So sometimes it's a materials company and we invested already in a materials company. So we need to like diversify into other subsectors of climate tech, right? So there's so many reasons why a company is not an exact fit, right? And there's not equally not a cookie cutter for the diligence, right? Because if a deal comes to me cold, then I do like to back channel as much as possible before interacting and reaching out. And back channeling doesn't mean necessarily, I know the stance that some of my colleagues in the VC world have, like, well, if that person can find a warm intro to me, then why waste my time? They're not going to be successful. I don't necessarily hold that very hard line. perspective. I do think that when I say I back channel, I do try to do this myself. Like, okay, there's maybe some mutual connection that I have. Because it's particularly true if they're first-time founders, they might not know the rules, right? Of the valley, whatnot. So it's okay. I can try to find my way in and back channel the company, the founders. If it was in the case of Aaron and Mars Materials where it was a warm intro, then it's easier too, right? Because then the warm intro came from someone. This is particularly true. If the referral came from someone you respect, uh, then it carries more weight. If it's from someone I barely know, I'm like, well, okay, thanks for sending this over to me, but I don't really know you all that way. Well, I don't, but in this case, it came from someone I respect. So I just got into a conversation with them as well, like, what was your conviction around this too? And then I would also like talk to other people that once the data room is shared, right? Like Aaron or I can ask Aaron, and I did, right? For like, hey, can I talk to any of your current investors or like anyone that you think that it would be appropriate for me to talk to? That's more like on book or references, right? But we also do a book, right? Or off list, which in this case is like who else might know him and his work, right? That I want to talk to. It might have been you, Kelly, if I know that you knew each other and I knew you back then, right? For example. So things like that. And it also depends on the time that you have to make a decision. So so if the deal is super hot or you catch it really last minute, then I can accelerate and I can flex to that time. So then that means, okay, so I have a very little amount of time and I don't really know a lot of people. I don't have a lot of mutuals with this person. So what do I do then, right? Um, and to Paul's point, yes, I'm a solo GP, so I don't have full-time people working for me that I can just say, hey, you do this. So it has to be me, right? And so, yeah, I mean, we can talk about what that looks like when you're a solo founder or solo GP. But yeah, it's a different animal. But we live in the era of AI too. So and
That is
everyone,
true.
yeah,
And it's
talk
so helpful. We at Decile, not to do a hard plug, but we are rolling out so many cool AI features to help fund managers in Decile Hub. So if you haven't been in there in a while, make sure you're logging in over the next couple weeks because you're going to be blown away at all the different tools that are in there now. I'm so excited talking about getting nerdy about the things you care about. It is very specific, but it is there to help and support you if you are on that journey. Aaron, I do want to go to you next, but Karen, really quickly from the chat, you mentioned there that, it's not always a yes for founders. And someone has just asked, how do you handle whether or not you give feedback to founders after you've said no to funding them?
Yeah, I think that most VCs have a problem of volume handling. Um, and most solo GPs, that's even more exacerbated. Okay. So things that come, whether it's through someone reaching out in my network saying, do you want to meet this founder? I will very quickly looking through the pitch deck and I can tell already, looking in like 5 seconds or a minute, this is going to be a fit or not. It's very quick for me to figure out whether this will fit squarely the thesis or not, because our thesis is very specific. And most emerging VCs have a very specific thesis. So we do have to stick to the thesis. There are some can make exceptions because of one reason or another, founder strength, execution, or maybe like they worked with that person before, right? And they know they trust them, right? Like for to complete or execute whatever it is that they have in front of them. But I would say for us, if it's off thesis, I'll say it's off thesis, right? And a lot of times it's really obvious. Like if you're based in another geography, we invest in the US only from Fund One. It's really easy to see why or to not understand why. I mean, we are very transparent. We put it on our website. You can find like the things that we invest in. I also actually had office hours with founders yesterday. That was our first official founder office hours yesterday, virtual. And part of the criteria to join is like the thesis criteria, right? US pre-seed, climate, B2B, selling to Fortune 500, right? It's pretty clear, right? And so if you meet all of them, but the traction is not there or you're way too early, like below TRL 5, this is lingo for like technical readiness level, So in essence, if you're below that, it means that the investor is taking on technical risk, which we don't typically. Then, I will make that known. But yeah, there can be so many reasons, so many, right? Why it doesn't fit the thesis that is very narrow, and we communicate that.
And Paul, I'm curious quickly, do you all, when you decide to pass on a fund, do you actually share your reason for passing?
Um, Not always. I mean, I think for us, it's more because we're not dealing with huge numbers. There's a bunch that we pass on because their minimums are too high, and we're not in a place where we want to be, putting all of our money into one fund. We're looking to diversify and to learn from our investments. And so, um, some of them aren't good fits because it's just too much, they too high a minimum, or there's other requirements that we don't really want to get into, and we're fine with telling them that. Um, but also just, we have a limited pool to invest every year, and that just means that we have to say no to a fair number. But that's also just um, in our experience, we've also discovered that there's a lot more flexibility than we had first imagined, in terms of coming in at which amount or another amount. And so we'll be upfront, as to how much we can put in. Theoretically, there's a bit of wiggle room, but then we will let them know whether it fits or not. So, or they'll let us know whether they can flex down. So usually it's down.
Awesome. Well, thank you for that, Aaron. I want to bring you back into the conversation. You have a really interesting perspective in this, I think, since you have had multiple companies that you've fundraised for. I know you've been fundraising. I'm going to date us a little bit here over the last 15 years or so, at least in the tech startup world. So I'd love to hear from you kind of what changes have you seen or what's really been consistent over that time? Or do you think you've just gotten better at kind of finding your people and taking the no's along the way and not a lot has changed otherwise? Would love to hear your thoughts.
Yeah, I think good question. I think it goes back to that trust factor. So, um, over the last 15 or so years, working in startups, now I'm dating myself, like you said, I think when you're a first-time founder, you forget sometimes the reasons why you start your venture. It's to have agency, it's to be your own boss, it's to make things that aren't being produced today, and to do it in a way that's novel and unique and can scale fast. But then you get caught into the systems, you get a lot of feedback, and you start to try to, find ways to make your idea kind of mold with the feedback that you get. And I think that's where I've gotten sharper. Coaching from folks like Pachamama has been helpful there. One of our advisors calls it sharpening our elbows, really being able to find that feedback that's important to you, that's relevant to the idea that you have, that can make it stronger and reduce those risks that you're hearing, while also keeping true to that vision that you have. Assuming there's market adoption, because ultimately the customer is what you're trying to deliver value for. But what I found is that you get those true answers, and that the feedback that you actually need to actually grow your business, the closer you are to that VC. I've never gotten a I'm passing on you because it doesn't fit in our thesis, or excuse me, our portfolio composition. That's not something that I think is typically transparent unless you're very close to a VC. Then they can be upfront with you. Most of the feedback you get is, here are some things that you need to do to de-risk your business. And I think that's always very valuable. And you can usually tell when someone's being kind of very transparent with you in that regard. So what we try to do, and I think this goes back to maybe our early start code days, Kelly, if you recall that line, be a line, not a dot. Right. So building that rapport over time, with regular updates. We do bi-monthly check-ins for existing investors, quarterly for external investors and prospects that we're looking for. So that helps to build that trust. It helps them to see that we are reducing those risks, that we're listening. And when folks want to reach back out, we can start building those deeper relationships so that when the time does come and there is an opportunity for timing and alignment, maybe there's a good fit.
I love that. And I actually have that in my notes to mention. So, folks, if you've never heard that idea before, it's from Mark Schuster. Investors invest in lines, not dots. And I think that that actually goes back to, kind of all three of you that we have here today. So, the LP, the GP, and the founder. When we are building relationships with folks, which, has been the number one theme of this conversation, it seems, every single interaction you have with them is a dot on a graph, right? And what investors are doing is saying, okay, this is my first interaction, this is my second, this is my third. Are they going up and to the right? When they say they're going to send me information, are they sending me information? If I'm logging into LinkedIn and, Karen and Aaron are the first post and their smiling faces at a dinner are there, even though I didn't interact with them, that's one more touch point. Newsletters, events, interactions with other folks, references, even how you get connected to somebody, right? Paul had mentioned that, he was connected with Karen and then Karen interacts with him and he has a great experience. Now, whoever Karen refers to Paul, Paul's going to say, well, I had a great experience with Karen. So maybe I'll have a great experience with this other person. Maybe I won't, but I'm willing to give it a shot. I'm willing to go that extra mile. We talk about this all the time. And I think it's one of the things that a lot of folks say, and it's so true. But when you have these very clear moments of, venture is a give first industry, right? And people genuinely want to be helpful. And one of the tips that a lot of our mentors will tell the folks that come into, let's say, VC Lab raising a fund or our emerging institute for folks raising funds 2 through 4 is, every interaction you have is either, are you interested when you're actively fundraising? Are you interested in coming on this journey with me? Or who should I be talking to? Right. And it's not as a transactional, what can you do for me? But it's, hey, can you help me find more people? Right. Because as we've talked about a lot today, and we actually didn't talk about how, there is a level of impact here. Right. And you could be doing this or investing in this just because you care about climate, but it doesn't typically come back to just that one thing. Right. It's climate, it's the investment opportunity, it's somebody that you have met that you believe you can trust, that you think is going to be a good steward of your capital. From Paul investing in Karen, he had to believe that this was a good investment and a good steward of his capital and the group's capital. Karen had to have that same decision going to Aaron. And again, those dots that become the lines is how you build that trust, how you build that rapport over time. And then again, I keep going back to this idea that capital moves at the speed of trust. So we have about 5 minutes left, and I always really like to end these on just an inspirational note. And so I would love if everyone could just, give a word of advice, whether, Paul, if you're talking to our audience of, we have some LPs here from our LP Institute that are just breaking into this world. You just mentioned that you're a bit newer to this world. Any inspiration, Aaron, for founders, and Karen, of course, if anybody who is looking to launch a fund and you have actually just done that and closed your first fund. Again, congratulations. Paul, you're off mute, so I'm going to call on you first.
Great. Thanks, Kelly. And thanks for that line of dots, because it's really true. I think one of the most important things that I look for is it's the conversation that you have with people. I have yet to have an uninteresting conversation with a fund or a founder. They all have interesting stories. They're all doing some, interesting, compelling work. The fact that we don't invest in all of them and can't invest in all of them is not a reflection on that. And so if you go into every conversation thinking I'm going to get, a valuable insight from this, even if I'm not going to get an investment. It's not everything, even though we're in, the world of venture capital, not everything is transactional. And so I think that's important. And as I said earlier, I think um, your past experience does not necessarily predict your future success. Um, but it is really important to your future success, and that it's about how you take your previous experience and remold it, and how to talk about it in the current context. And so to all of those LPs who are, new, um, again, it's really important to understand what your thesis is, what your tolerance for risk is, because ours being a foundation, our tolerance for risk is higher, um, because an express purpose of us existing is to help push that risk into a different territory. So I'll
Amazing.
stop there.
Thank you so much, Paul. Karen, would love a word of inspiration for any of our aspiring VCs out there that are thinking about launching a fund.
Yeah, I mean, I would say don't overthink your background not looking like a cookie cutter. I think it's actually turning into your superpower, right? We do need diverse perspectives and backgrounds in VC. So my own path, just I don't. I mean, I was a Fortune 500 or 100 executive. It's not typically the background that comes into VC, and and to Paul's point, right? Like I had experiences doing different things that I do today as well that led me to today, but they were disjointed. They were not very clear. So it's all about on how you're positioning yourself and making sure that you play to your strengths from that past life to today's in VC, right? So VC Lab helps with that. Just check them out, continue engaging, and yeah, best of luck.
And I swear we didn't pay her to say that. Aaron, a word of inspiration if we have any entrepreneurs here.
Yeah, I would say, we exist in the carbon removal and carbon utilization industry. That is anticipated to be a $1 trillion market by the mid 2035, mid 2030s, excuse me. So huge opportunity there, and that takes scale, and we have to get there, and we're all building up to get there. And with Paul's and Pachamama's support, we're on our way. But that's not just an impact. There's also systematic change that's being happening underneath that. We've been working with the U.S. Navy. We were able to demonstrate that we can reshore a critical material supply chain for it. That's huge, and that's a compliance challenge. That's a national security solution that we're solving, also with our Trojan horse of a climate solution. But it does take plans, right? It takes, we use a very rigid stage-gated formula to scale up. Karen knows, I'm sure she's overexhausted of me talking about it. But it addresses things that I think are important when you're looking at companies that do take a while to scale up and have high capital intensity. IP, having a big market with systematic challenges you can solve that aren't just climate. Leadership and team, your partners. We've been able to accelerate our work with working with Shell, saving millions of dollars. And then the ability to leverage blended capital, being able to tap into sources like Paul for, we can use leverage like non-dilutive funds, and we've brought in over $7 million today. 85% has come from non-dilutive monies to get to where we are de-risking our activities. So really thinking more holistically, like about how do you scale your business up and where venture fits in, and then making it very clear to your VCs where venture fits in, so they're not worried that they're going to get diluted.
Yeah, absolutely. Well, I know we have to wrap it up. I cannot thank the three of you enough for coming and sharing your perspectives. Capital is moving. We are actually seeing record-breaking funding into emerging managers, which is thrilling because each of those emerging managers then goes and redeploys that capital into founders just like Aaron, who are tackling the biggest and, honestly, the most important challenges that we as a universe, as we talk about Mars materials and how we save this planet and climate and everything else. And again, I just hope that if you are interested in this journey, that you all will take at least one step today, whether that's applying to our programs, reaching out to an old friend, getting on a call, going through another no, and understanding that, that's just going to be part of this process, no matter where you are in this stack. With that, I will let everyone go. Enjoy the rest of your day. And again, please, if you are interested in starting a company and launching a fund, do that. Bet on yourself. We will all be better for it. And again, thank you so much for joining us, Paul, Karen, and Aaron.
Thanks,
Thanks,
Kelly.
everyone.
All right.
Thanks,
Thank you all.
everyone.
Bye
Bye,
now.
everyone.
Bye.